Why is this $2 trillion market, the most important market in the entire world, crashing right now?
Oil prices tumbling.
Oil market is telling you that we're heading into a recession.
I'm going to reveal the answer in one simple, fast step. Let's get right into it and go over some of the fundamentals of the oil market. First and foremost, we know just a couple weeks ago, OPEC Plus came out and announced that they were going to cut production by over 1 million barrels a day. Also, we know there's a lot of geopolitical tensions right now with Russia, Ukraine. Russia was a huge supplier of oil to the West. So now that that is offline, that is restricting supply. We've got this bifurcation, really, the entire world. You've heard a lot of the de-dollarization, and the BRIC countries really forming this alliance. So if we go back to the 1970s, let's say, where we have this Cold War between the West and the East, now it's the West and the BRIC countries, this means that oil supply, commodity supply in general, is going to become tighter and tighter and tighter. Okay? And we've got the dollar. It's still pretty strong, but it is getting weaker. We've got China reopening. We've got ESG. What this means is there's been very little investment in energy, more specifically, oil. And let's not forget backwardation. Now, I know a lot of you right now, I just completely lost. You're saying to yourself, backwardation? George, what on earth is that? Are you just making up words again? Actually, I'm not. This is a concept that's very important to understand. So, editor, let's cut right to the internet. We're going to go back to March of 2021. And right here, we've got a chart of the WTI, or oil futures curve. Okay, so back in March or February, the closing price of oil was right around, let's say, $63 a barrel. But I want you to notice the futures contract for March of 2022, meaning a year into the future, was trading around $55. So under the current spot price. And if we look at March of 2023, it's even lower. March of 2024, the exact same thing. So when the current price of oil is higher than the future predicted price based on the futures market, this is when the oil futures curve is in backwardation. And it doesn't make sense at all. That's probably why it's called backwardation, because it's completely backwards. Because what you should have is the curve steepening. In fact, just like the yield curve. The current price should be lower than the future price. Why? Because you got to pay for storage. So think about this. If you're Southwest Airline and you're buying, let's say, fuel contracts, futures contracts, something like that for jet fuel, and the futures price is higher, well, you're probably going to be willing to pay that, because if you were to buy it today and store it just in a warehouse, you're going to have to pay for that storage fee. So that's why you usually see that curve steepen up, because there's fees involved, and sometimes maybe you have to borrow the money to actually buy the commodity. So the bottom line here, are there costs involved in holding a commodity longer term? And that's why, again, the curve is usually steep, like a normal yield curve, and that's called contango. So when you have this anomaly type of situation, backwardation, it's telling you a few different things. Number one, the demand for oil right now is pretty darn high, because why would you buy it right now when you could pay a much lower price in the future? Well, because you have to have it right now. You don't have a choice. And another thing this tells producers is that, hey, if the market is predicting the oil price is going to be lower in the future, then I'm going to produce less. That's key. So let me say it one more time. If you're an oil producer and you see the curve in backwardation, it's likely that you are going to produce less in the future. Okay, well, let's think this through. The curve has been in backwardation, for quite some time, going back to at least March of 2021. So now that we are in the future, let's say March, April, May of 2023, we should be seeing the effects of all of those production cuts that were made back in 2021, 2022, because the curve was in backwardation. So what we have, production cuts, reducing supply, geopolitical tensions, reducing supply, ESG, reducing supply. So now I know a lot of you are saying, wait a minute, George, it sounds like you're making a bullish argument for the price of oil. And you would be exactly right. All the fundamentals right now are screaming that the oil price should be going higher. But now, let's look at a chart of what the price of oil is actually doing. And for this chart, we only have to go back to April 28th. On the left, we go from $68 a barrel up to $77 a barrel. So going back just to April 28th, we see that the price of oil right around $76, $77. And over the last few days, it has absolutely tanked. It has fallen out of bed. Look at this price drop. In fact, just in the last 3 days or so, it's down by 12%. And if you go back to the OPEC supply cuts, remember the price shot up to $80 or $82? Since that time, we're down a whopping 17%. And this is in spite of the supply being incredibly low. And a couple other variables I'd like to point out is Joe Biden, the administration, has been dumping oil onto the market via the SPR, the Strategic Petroleum Reserve. The market knows this, so it's pricing in the fact that a lot of the supply that we have, which is already extremely low, is only temporary. To really understand the oil market right now, I want you to think of housing, because that's something that everybody is very familiar with. And you've heard it over and over and over again in the mainstream media that right now supply of housing is very, very tight. So even if we have demand go down a little bit, if we have a recession, the housing market, so they say, isn't going to go down in price because there's just not enough homes. It's the exact same thing right now in the oil market. But we are seeing the price go down, and we're not seeing it just go down, we're seeing it absolutely collapse. So why is the oil market crashing? And maybe more importantly, what does it tell us about the future of the economy? Let's go over a quick visual that I just drew up here. You can tell my awesome artistic ability. And this is another chart, we'll call it. I've got it divided into 3 different sections. So these black arrows indicate the price direction. This black line right to the middle indicates the normal supply-demand balance. Green equals supply, red equals demand. So in our first scenario, we see the supply-demand balance, pretty much normal. It's in that equilibrium. So as you would expect, the price flatlines. Okay, so now what happens if supply goes down? Like we've been talking about in this video. It's very constrained right now, almost unprecedented. All right, well in that case, if demand stays the same, again, by this green line, that red line, you would expect the price to go up. But that's not what we've seen. We've seen the opposite of that. So what would this tell us? Or what is the price telling us? That price signal that is so important. Well, since the price is crashing, this tells us that future expectations for the demand for oil and therefore energy is crashing as well, represented by this blue line. Well, hold on a second. Let's think this through. Energy equals the economy, like my good buddy Art Berman says. You guys know that from watching my videos. Okay, well, if the market is predicting that the demand for energy is going to crash so low that it's going to exceed the limited supply we have to the point where prices are actually collapsing. This tells us that the most important market on the planet Earth is predicting a recession, if not an economic depression. Oh, but wait, unfortunately, there is more. Editor, go and throw up the current price of oil. And now let's look into the future to determine what the market is telling us about demand for oil, therefore energy, therefore the economy. And we can see that that curve is still in backwardation. What this is telling us is even with the price plummeting lately, and even considering the very low supply, the market is predicting that it's going to get a heck of a lot worse before it gets better. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here. I will see you on the next video.